Now I'd like to welcome all of our attendees, our panelists, for attending the Marshall Fires, what you need to know to help your clients webinar. I'd like to give a special welcome to Clint Folsom, Mayor of Superior, who is joining with us today. We have a great lineup of panelists for this webinar. Cindy Braddock, Boulder County Assessors, Ted Leidy, Chief Executive Officer for the Colorado Association of Home Builders, Amy Bach, she is with United Policy Holders, Austin Perez, Senior Policy Representative for Insurance and Issues with the National Association of Realtors, Laura Levy, she's a realtor with Coldwell Banker, Cameron White Ford, VP Mortgage Sales at Elevations Credit Union, and Dave Cadell of Cadell Appraisers. We're going to start off by introducing each panelist. I apologize. I'm going to give you a brief bio on them and then let them have 2 minutes of an opening statement. I'm going to begin with Cindy Braddock. She was appointed Boulder County Assessor in January of 2017 and was elected as assessor in 2018. Her current term continues through January 2023. Cindy was hired by the Boulder County Assessor's Office in 1995 and since then has held various roles, increasing responsibilities, most recently serving as Chief Deputy Assessor. Her work experience firmly rooted her understanding of the property assessment process, using her broad background and understanding of technology, office management, and mass appraisals. Cindy has served the citizens of Boulder County, striving to provide timely and equitable value and excellent public service. Cindy, if you'd like to say some words to the attendees.
Sure, and thank you, and that sounds onerous. And I'm Cindy Braddock, I'm the county assessor, and my responsibility is to establish property values. And I want to start out by saying that I am deeply saddened by what has happened to our community here and to all of you who lost homes and who know people who've lost homes. I send you my deepest sympathies. I am a Louisville resident, and so I have watched my home was not impacted, but watched my community. It's just been heartbreaking. And it's also been heartwarming to see the community rise around, not only in Boulder County, but beyond. There's been amazing outreach and support for the folks who were impacted by this fire. So as I said, my job is to establish values. Disasters like this enact a bunch of laws that allow us to work with property owners. And I won't get into the details, but I can certainly get into that with questions as to what happens if your property is damaged versus destroyed, what happens to your tax bill for 2021 versus 2022 and forward, and also what happens if you happen to have a senior exemption on your property and it was damaged or destroyed. So I'm open to any questions that you will have for me.
Fantastic, thank you very much. Our next panelist, Ted Leidy, again is the Chief Executive Officer of the Colorado Association of Home Builders and the HBA of Metro Denver. He's been with CAB since November of 2017 and HBA of Metro Denver since December of 2020. Previously, Mr. Leidy served as Vice President of Governmental Affairs for the Colorado Association of Realtors, where he directed the public policy efforts of the association. He also held the positions of Director of Governmental Affairs and Public Policy Manager for CAR. Mr. Leidy has served as an aide to members of both the Colorado General Assembly and United States House of Representatives. He is a past member of the Littleton Historical Preservation Board. He also supported both financially and with his time several civic and charitable organizations. He is the immediate past chair of the Colorado Real Estate Alliance, a past chair of the Colorado Competitive Council, and current board member of HomeAid Colorado. A native to Colorado, born in Boulder, Mr. Leidy was raised in Minnesota and Oklahoma, but returned to Colorado as soon as he could. He currently resides with his family in Littleton. He holds both undergraduate and graduate degrees from the University of Colorado in political science and public administration. Ted, if you'd like to say a few words to the attendees. And Ted will be off camera as he is having a tad bit of technical issues.
Thank you, Amy. Thanks for having me. I'm going to have it on right now. Hopefully we don't have those issues, but apologies if I have to turn my camera off. It's good to be with you. I wish it was under different circumstances. As Ms. Braddock said, all of the home building community, our hearts and thoughts and prayers are with those impacted. We stand ready to help. We've created a task force at the HBA of Metro Denver to help with the recovery and the rebuilding and working with local government partners, those impacted, insurance, and any other stakeholders that we need to. Really appreciate the time today to get to talk about kind of our role in this. I think there's a lot more questions than there are answers right now. And one of the things that we're trying to be is a credible resource and get those as many questions answered for impacted homeowners and local governments. So thanks for having me. Look forward to serving with these other panelists today.
Thank you, Ted. Our next panelist is Amy Bach. She's been a professional insurance consumer advocate since 1989. She co-founded United Policyholders in 1991 and serves as the organization's executive director and primary spokesperson, shaping and overseeing the roadmap to recovery, roadmap to preparedness, and advocacy and action programs. A nationally recognized expert on insurance and disasters, she is frequently interviewed in print and broadcast media and is the author of numerous publications, including the Disaster Recovery Handbook, Wise Up, the Savory Consumer Guide to Buying Insurance, a contributor to Buying Your First Home, Nolo Press. Amy has received many awards, including Money Magazine's Money Hero. She is in her 14th year as an official consumer representative with the National Association of Insurance Commissioners. She is also an appointed member of the Federal Advisory Committee on Insurance, the American Bar Association Standing Committee on Disaster Preparedness and Response, and the board of directors of the Healthcare Consumer Rights Foundation. Amy, welcome. And if you'd like to say a few words.
There. Thank you so much, Amy. It really is a pleasure to be with you, although, of course, I'm so sad by the circumstances that have brought us all together. If you have not heard of our organization, now you all have a new free resource for you and your clients. Our website, it has libraries and information on all aspects of insurance that particularly focused on homeowners. And at this time, we are in your community. We have had a table at the Disaster Assistance Center, which, as you all may know, is just about to close. And we have staff located in Colorado and volunteers, and we have very strong partnerships with Boulder County and the Colorado Division of Insurance. This is probably maybe the 5th or so forum I've been part of since the fires, and my organization is here to help. So we have already been hearing and fielding many questions from homeowners who both had a total loss or a partial loss and are trying to understand the insurance process. Your sector, realtors, has always been a very important partner to our organization. We've almost always had, in our 30 years of being a voice and a resource for insurance buyers, a member of our board of directors who's a realtor. So we are very much intersected with your profession. And in the aftermath of a disaster like this, obviously, realtors very, very important as people look to find replacement housing and need a lot of help with establishing the valuation of their destroyed home and also identifying options for getting rehoused. So I'm looking forward to answering the questions And really so pleased to be with you today. Thank you.
Thank you, Amy. Our next panelist is Austin Perez. He is the Senior Policy Representative for Insurance Issues with the National Association of Realtors. In this role, Austin is NAR's public policy expert on federal insurance matters, including flood, health, and terrorism insurance. He is also staff director to NAR's Member Insurance Committee, which develops the association's position on insurance and related public policy. Austin joined NAR in 2008 after lobbying 6 years at the American Farm Bureau on environmental, labor, and immigration issues. Austin, welcome. Go ahead and have a few words with the attendees.
Thank you. So can you hear me okay? Great. Yes, so echoing Ted's comments, really difficult circumstances, really sorry. We're all sort of in this situation. Hopefully there are a few things the federal government can do here. First, I think you all are aware that the federal government has declared a major disaster after this wildfire. This is one of only 50 of these declarations that have been issued in the last 60 years. I think there's a recognition that the scale and scope and surprise of this was large enough to involve federal involvement. Our lobby team, your lobby team, thank you very much for the resources. I'm your staff in Washington, D.C. Our lobby team is second to none in Washington, D.C., has already started to reach out to Congress and the administration to see what additional resources that might be available. There are some early discussions. It's too soon to tell. I can tell you that it's rare. I'm only aware of one other wildfire for which Congress provided supplemental appropriation for individual assistance. It was in a particularly difficult year after a large series of wildfires in one state, and it was part of a much broader package. So it wasn't a lot. Every little bit counts. We are going to try to bring some more resources, and if we can help answer questions. I mean, again, you know, NER, I'm sure we're going to talk a little bit more about what resources NER can bring to the table. But yeah, I'm really glad to be here. I'm very interested in hearing what questions I can help with.
Thank you, Austin. Our next panelist is Laura Levy. Again, Laura is a Realtor member of BOLO. She is with Coldwell Banker Realty in Boulder. She comes from a real estate family and has been in the industry in Colorado since 1994. As a resident of the foothills outside of Lyons, she was very involved in the 2013 floods that devastated the region. She took a hiatus from the real estate industry to be a recovery manager for the 2013 floods and then the Hyde Park fire. She was also contracted by Larimer County to build a recovery management plan for the pandemic. Her team has offices in downtown Lyons and Boulder. She also owns 2 real retail stores in downtown Lyons. Laura, thank you so much. And if you would like to give a few comments to the attendees.
Thank you, Amy, and thanks for assembling this pretty amazing group of panelists who can provide a lot of answers, and also, I think, a little bit of focusing in on what's next, because I think there's a lot of questions around that right now. For me personally, this is a bit of a collision of many of my worlds. My first home purchase was in Louisville, and I was involved in the condo conversion of the Saddlebrook community in Superior. I also marketed the Ridge up at the top of McCaslin. So, you know, I really feel like our whole region feels like this is our backyard and our family and our community, even though we may not have an 80027, you know, zip code on our personal homes today. So my hearts are with everybody. I also have been incredibly inspired by our realtor community and the outpouring of assistance and guidance and help. And, you know, our industry every day is all about home and helping people find their best home. And yet what I've seen is so inspiring, just everybody coming together to help people in need. So that's been really a wonderful, you know, side note to this devastating event. There has been a bright light, and the group of people who are attendees are really part of that. I think what I bring to the table in terms of information is recovery is all about planning and developing your own roadmap. And every disaster is different. And I've been involved now in flood and fire and pandemic, and who knows, Sharknado could be next. I don't know, but every time the plan is different, and it's all about creating the best plan so that you end up hopefully in a better place than where you started. But it takes a long time, it takes a lot of patience, and it takes a lot of collaboration. And I'm looking forward to hearing about people's questions today and providing hopefully, you know, a little bit of guidance and hope. Thanks.
Thank you so much, Laura. Our next panelist is Cameron White Ford. Cameron is the VP mortgage sales with Elevations Credit Union. He came to Elevations as a loan officer in 2011 after nearly a decade at Countrywide Bank of America. Today, Cameron heads the sales team at Elevations Credit Union, comprising 5 teams of about 40 loan officers. Together, they fund thousands of loans in Boulder County each year. Cameron moved to Superior in 2003, pulling into Horizons, now Bell Flatirons, on a hot August afternoon. He eventually bought a townhome in Superior and then a home on Eaton Circle with the idea of his children attending Superior Elementary. Despite moving to Niwot several years ago, the Superior and Louisville communities remain his home. While Cameron's focus is on origination, over the years, thanks to floods, hailstorms, pandemics, and now fires, he's learned the joys of insurance checks, forbearance, deferrals, and loan modifications. Cameron, thank you. And if you'd like to say a few words.
Thank you, Amy. I am honored to be here. I will do my best to represent mortgage as a whole, not Elevations. That's my goal. And we'll take off my sales hat and kind of wear the servicing hat. I look forward to your challenging questions, as I know they will be. Thank you.
Thank you. All right, our final panelist today is David Cadell of Cadell Appraisals Incorporated. Dave is as close as can be to a Colorado native, having grown up in Boulder. He's been appraising for 30 years, the past 25 in Estes Park. He's married for 40 years to an awesome wife and is blessed with children and grandchildren. He really likes helping the public with his knowledge to solve property issues. Dave, welcome. And if you'd like to say a few words, go ahead.
Well, thank you. I'm really humbled to be asked to be on this panel because I do like to help people. The first thing, we experienced, Laura did too. I mean, the flood, the fire close to us just last fall, the evacuation. So I get a feel somewhat for what people are going through. It's taking your life and just upending it completely. And the biggest thing I would advise people to do is don't make rash, quick decisions on what to do with their property, whether to rebuild or not, because things are going to unfold and change as every disaster event is a different set of circumstances. I really feel that eventually the markets will rebound. They usually have in most other fire areas, unless there's repetitive fires. And don't be the first one to try to sell something because, their first buyers probably are going to be investors looking to make money. And if you go to rebuild and you're running short on your insurance policy, like I've heard a lot of people have, then you could adapt your rebuild to maybe don't finish the basement, add the garage later, add decks and stuff later. So you don't, end up shorthanded. And I think what appraisers will have to do, what we would have to do, like after the flood here, I tracked everything that was under contract in the area and everything closed except one home. So that gave me a real positive sign of hope. And I think that's what appraisers will do in that area, and also look at other similar markets with fires and what happened there. You don't want to be the trailblazer probably when it comes to rebuilding first, or, you know, attaining financing first. It's going to be a tricky scenario. And I'm available if anybody has questions, they want to call me privately, or any of the brokers out there. If people have questions, I'll be glad to help. And I appreciate everybody's time. Thank you.
Thank you very much, Dave. So on BOLO's website, you will find a list of resources. We are adding information to that on a daily basis. Actually, we add information to it all day long. So as soon as we get information from the OEM or Boulder County, City of Louisville, Town of Superior, we are adding that information on there. We are also collecting funds. So the BOLO's Foundation is collecting funds. 100% of the money raised will go to the fire victims. We are partnering on that with Elevations Foundation. So we encourage you not only to contribute, if you haven't already, and also to pass that around to your spheres so that we can help these victims. This fund will help not only in the immediate need, but in the future need as well. All right, so that being said, we're going to move into the question part of this webinar. And the first question that I'm going to ask is going to be of Cindy Braddock. Cindy, what valuation is the county going to use to determine my property tax? And this would be in the event my home was affected by the fire.
Sure. Thank you. That's a really great question. So we distinguish between destroyed properties and damaged properties, and they're handled differently. So for properties that were destroyed, and that's the bulk of the properties in this disaster, those properties, for the tax bills that they're receiving right now, they'll be getting here in the next month from the county treasurer, they will only be responsible for the land portion of the tax bill. There is a statute in place that says that the state of Colorado will pay the part of their taxes for the destroyed homes. So they'll get some immediate relief in their tax bill coming up here, and I believe the treasurer will have those bills out here within the month. So that's 2021 for destroyed properties. So there is relief, and I know people are looking for every penny they can find to help with their rebuilding or decision making. So this gives them some revenue there. Destroyed properties going forward, there's another statute that says that for 3 to 5 years, until the home is rebuilt, the land is on as vacant, but at the residential rate. So they will not be paying the vacant land rate, which is 29%. These will be at the residential rate, which drops for next year. It's dropping to 6.95% for 2023 and 2024. So and then the legislature will need to make a decision after that. But so they will be paying taxes only on the land as residential at the residential rate until we see the home rebuilt. After about 3 years, we'll start looking to see if there's an intention to rebuild. And we can, as long as there's an intention to rebuild, we can keep it at the residential land rate until we see a rebuild, usually around 5 to 6 years. But we'll be asking questions and working with property owners. So that's what we'll be doing with destroyed properties. We're also doing a lot of research right now around the impact of the land. Is the land whole? What we found in the previous fires, 4 Mile, Calwood, Spring Gulch, I mean, we've had a series of them, is the land was damaged. And so we actually reduced the value of the land as well. Year over year, that gets looked at. So we're doing research on that. I can't tell you what that will be at this point because we haven't arrived at that. But most likely there is something that's going to happen to the land to reduce it, over say a 3 to 5 year period. All of the destroyed properties will get a notice of valuation this year, usually in an intervening year or the even numbered year. You don't get a notice of valuation, it's your tax bill. But this year, because values are changing on these properties, they will get a notice. They will have a right of appeal. And so they should look at that notice that comes out on May 1st and reach out to my office if they have concerns. Damaged properties have a different path. So damaged properties will pay a full tax bill for 2021. And that's the law says that we must do it that way. In 2022, I have staff working on it as we speak to determine how much damage these properties have and how much reduction in value they will have, which will impact their taxes. So they, again, also will get a notice of valuation in May. Be happy to hear from them if they have concerns about how we've established their value. And then we will watch as these properties get remedied. If there's repair that happens in a year or it takes longer, we'll recognize that in their values. So that's the basics around valuation and taxes. And the last piece she didn't ask about is what happens if I had a senior exemption on my home. So the senior exemption for a property that was damaged by a natural cause stays with the owner. So it will stay on your property, and if you choose to rebuild, it'll be there for you when you move back into your home. Should you choose to sell your home and move to another property in Colorado, purchase another Colorado property, that exemption goes with you. So this is one of the few instances where people do not lose the exemption based on their senior status. So if there's any questions, be happy to answer them.
We'll take questions after we go through the predetermined. Thank you very much, Cindy. My next question is for Ted Leidy. Ted, there has been conversation in both the areas affected by the Marshall Fire that rebuilt homes will have to comply with current building codes, not what was in effect when the home was originally constructed. In addition, the municipality staff is evaluating adoption of portions of the 2021 International Wildland Urban Interface Code. How will these regulations affect the cost to rebuild?
I am going to keep my camera off. Sorry, I'm having some
That's
issues
fine.
right now. But thank you. So I don't know yet the impact of the 2021 International Wildland Urban Interface Code, or the WUI code, and what those costs will have. I can tell you that one of our builders, at the behest of Louisville and a consultant they're working with, had asked, can you give us the cost increment between the 2018 code and the 2021 IECC? And in Louisville, they also adopted what we call the NZE, or the Net Zero Energy Appendix. So between 2018 and just the 2021 IECC code, we have about 11,000 in price increase or increment between complying with the 2021 code and the 2018 code. So that is on the construction costs. And that number with the NZE component to it actually increased to about $46,200 over the 2018 code. So I know that there will be some cost implications on the construction side, and their ergo for the consumer or for the homeowner that is trying to rebuild with the International WUI code as well. I just can't give you any sort of numbers like I was able to do with the 2021 IECC. But really around codes, what we look to is what are the payback periods. If it's within 10 years, then it probably makes economic sense both for the builder and for the homeowner. If the payback periods extend beyond 10 years or the life of a property or that owner's property, the first owner's property, it makes it less economic sense. And the other thing that we look to on codes are they technologically feasible? Do we have the supply chain right now? Our supply chain, as you all are probably well aware, is really volatile. There's a lot of challenges in it. Can we get and source all of those materials as well? But where is technology? Is the technology there? What is the availability of those materials? So I don't know if I got to answer your question completely, Amy, but hopefully I gave enough color to kind of help the attendees understand kind of the intersection between codes and costs.
Absolutely. Thank you very much, Ted. Amy Bach, question is, my clients want to buy a new home to live in until they can rebuild. Can they use their additional living expense, the ALE, to pay for the mortgage of this new home?
So Amy, that's a really good question. And, you know, like a lot of the insurance questions, there's not like a super straightforward answer, which is hard for people to know that, you know, the insurance claim process is like life in general, that you, in some ways, get what you can negotiate. The bottom line, you heard one of the earlier speakers say that people not having enough insurance is a big issue. And for the whole 3 decades, our organization has been bringing our roadmap to recovery services to wildfire impacted communities. We do surveys that consistently bring the same figure, that 2/3 don't have enough insurance to cover the cost of replacing the home they had with one of like, kind, and quality. And so a lot of what people have to do is figure out how to contend with that situation. And so in the ALE, additional living expense coverage, you know, it's a bucket in the policy. Some insurers call it temporary rent coverage. Some insurers refer to it as fair market value. But just ALE, the money that comes to the claimant from their insurance policy to cover the expenses they're incurring from having lost the use of their home is typically paid on an as incurred basis, meaning you've got to spend it and then get reimbursed. The Colorado law is that people should have been offered at the point of sale when they last renewed their insurance 24 months, 2 years. But most policies only have a 12-month ALE default. So again, that means that a lot of people are short on their ALE, even if they have the 2 years, right? Because with the winter conditions, with all the competition for quality builders, with all the issues with this big of a volume of a disaster, it's very hard for a lot of people to replace their homes even in 2 years. 12 months is really hard. So given that so many people are coming up short, a lot of creativity in negotiations with insurance adjusters is called for, right? So in recent years, people have increasingly been negotiating with their adjusters to say, use their ALE, get an advance on their ALE, buy a nice RV or buy a fifth wheel. But again, it's a negotiation, right? The tricky part of wanting to use ALE for a mortgage is an adjuster is almost always going to have been trained to say no to that. But that doesn't mean that would be the final answer. So just to kind of bring it back down and simplify it, if a homeowner who's been impacted by this fire has a plan and they have the means not to wait until they reach a settlement with their insurer on their dwelling and know how much money they've got coming from their insurance, but they have the means to actually just buy a replacement house and then work it out. That's a tricky situation because it may cut off your ALE entirely once you replace your residence. And it might put you in a difficult negotiating position since you kind of jumped ahead. So, but it is not impossible to try to negotiate it. So my suggestion always to people is do your best to figure out as quickly as you can the replacement value of the dwelling that you lost. And then if you can come to that agreement with your insurer, you've got a number to work with, and that gives you a lot more flexibility to do what you want with that money. And on the last point about buying a replacement home versus rebuilding, there's always been case law that says that you can do that, but insurers have always taken the position that they're only going to max you out, give you your full benefits, including if you have coverage for building code upgrades and extended coverages, that they're only going to pay you that full bucket if you actually rebuild. But in California, we got a law passed that says that if you buy a replacement home, the insurer has to give you the same amount they would have given you if you replace. That's in a statute now in California. You don't have that yet in Colorado, but it does give your clients a basis for negotiating. So that's kind of a long answer to an important question. Give it a try.
Great, thank you very much. Real quick, I want to let the attendees know that if you are coming up with questions that you would like to ask of any of the panelists, If you would, please post those questions in the Q&A. And when we're done with the initial questions with the panelists, then Veronica will start asking the questions that you put in Q&A. All right, our next panelist is Austin Perez. Austin, from your knowledge of other catastrophic events around the country, what have you learned is a realtor's most valuable resource? And what resources does NAR have for realtors trying to help their clients?
Yeah, both great questions. So I have not been in the middle of a disaster of this magnitude. I have hurricanes and snowstorm events where I've been without power for a week or two, but nothing of this magnitude. I can't even imagine just the fear, the anger, the surprise of, you know, just wanting to get this done, get back to normal. But I have had a lot of conversations over my career with a lot of members. I've been at NAR for about 20 years, who have been in similar, if not worse, situations. And I think the two common themes I get from members who have been in this situation in the past. The first one is realtors get things done for their clients, and it's really your people connectors, your relationships with people is what gets your clients to the front of the line for anything that you can think of, and just about in a real estate transaction. And I think just the loss of control, because just the scale and scope and the magnitude of this, not having, you know, enough labor, the supplies are, you know, lumber, really expensive, supply chain issues. There's not as much that our members can do in this situation. So I think just that feeling of, you know, anger over not being able to do anything is something I hear very often. Second theme I hear often is just I guess it's the loneliness. It's the feeling of being alone. You know, just you know, why me? How, you know, what happened to this? Why did this happen? And just not feeling connected with other people, which a lot of us, you know, after COVID, a couple of years of COVID, I think we can all relate to that. So the realtors that I've talked to address those two situations, first, like I said, the relationships are your greatest resource. I'm sure you have short lists of you know, contractors. I mean, you know, probably have them for everything. You know, plumbers. You have them for home inspectors. You have them for just about every person that you would need in a real estate transaction. After a natural disaster, wildfire, a couple of additional relationships that you could draw on. If you don't already have them, it's not too late to build them. The first one I think is looking for contractors who specialize in wildfire mitigation. Just rebuilding to the same standard. There may be some of your clients who want to build to a higher standard. And if you need help with those, I mean, your local association is fantastic. The resources are fantastic. State association, our association. If you don't have these contacts, we can help you build them as well. The second kind, and Amy alluded to this, and by the way, Amy is fantastic. If you have not gone to UP's website, they provide all kinds of lists of contractors and resources that you could use after a disaster. In particular, a public adjuster, someone who could fight with your community, with your insurance company on your behalf. So having, and I mean, not endorsing one or the other, but having a couple of public adjusters, and Amy Sites provides 7 of them that you could connect your clients with. So that would be a helpful thing. Also, another thing that I forgot to mention, so on the question of what your replacement cost value is, your contractor should be able to tell you that. So just having a list of several contractors that you've worked with, that you trust, quality work, that are, that have some experience with wildfire mitigation. There are also free resources. I know Boulder city has a free wildfire assessment kind of site. So just having information available, brochures, pamphlets, websites, a couple of contacts. And I mean, just think about it. I've named a couple, but really, you know, think ahead down the road. This is not going to be a quick experience. It just, you know, think through what would I need in order to get through this disaster? And if there's someone that you haven't built a relationship with that you think that you would need in order to get through this, then build that list. Because I mean, I think that's the most important thing. Resource that realtors can bring is to connect our clients with the experts who can help them. So that's the resource. In terms of NAR resources, first, we were really pleased. The Realtor Foundation was really pleased to partner with the state association, the local association, to provide $2 million to Colorado for this particular wildfire. Up to $3,000 per family is available for eligible applicants. That is more than most people in the country get for disaster relief from the federal government. So that is an amazing amount of resource that NAR, the state, the local association has already provided. Secondly, NAR has a variety of programs to help you as you rebuild. We have smart growth grants. If you want to work with your local government in order to try to figure out what the challenges might be with land use, with zoning, et cetera, we have resources available for that. I mean, that's just one grant. We have a variety of resources where NAR can lend resources and experience to help you work at the ground level, at the local level, in order to try to solve a number of problems. I think another resource, go to our website, just like we don't compete with UP. I mean, UP has probably got the best set of disaster resources when it comes to insurance that you're going to find anywhere on any association website. But we try, and we provided a lot of disaster resources, checklists, fact sheets, how to apply for disaster assistance. And you already know that there's a Boulder County disaster assistance where you can get everything from counseling to applying for FEMA disaster aid. So that's, and I guess the last thing is, so the state and local association, of course, can help you with issues at the state and local level. There are a lot of states and a lot of local associations that have experienced a disaster of this magnitude. We would be happy to work through the state and local association to connect you with folks who have experience, national associations, state, local associations, just having their experience. Maybe, they went through it. My vice chair, my member is from Florida, from Tampa Bay, Florida. She's the vice chair of the insurance committee this year. Her house burned down in a fire on Christmas Eve a couple of years ago. So just, we can connect you with people who may be able to relate and may have experience with the kinds of challenges that you and your clients are going through, and we'd be happy to do it. Happy to connect you with those resources. And I guess the last thing I would mention, and particularly to sort of the sense of isolation or loneliness, what I think realtors bring is a sense of community. And I can't tell you the number of stories where I've heard where people would meet up on a Friday at a restaurant, once a week, in order for people to get together and share their experiences. And so I think that realtors can actually help foster and facilitate that kind of community and sense of being together in a challenge, looking ahead to a long road ahead. So I hope that helps answer the questions. I'd be happy to answer more questions.
Thank you very much, Austin. My next question is going to be for Laura. Laura, my client's house did not burn. However, they do have smoke damage. They want to sell. How long should they wait to list, and what is the likelihood that they will get market value?
Well, there's a few things that are going to determine quote unquote market value in an area that just suffered a wildfire impact. And we don't really have a lot of case studies in Colorado that are similar to this just because of the suburban nature, you know, and more populated nature of this particular fire. We have a lot of experience with true wildfires in the foothills, but in the foothills it's different because you're more responsible for your own utility infrastructure, and that can create more responsibility for you to do things like repair or replace wells, septic, things like that. But and possibly roads. A lot of roads are private, and so you are responsible for a lot of your own recovery, which can mean more risk and more burden on you to recover that. But it also means you might be able to start that process a little sooner because you aren't as connected in to the neighboring homes around you. So in this case, you know, there's going to be a lot of waiting to see what the overall debris management plan is and repair plan for, you know, all of the water and the sewer and the infrastructure, you know, of that particular neighborhood. So I think you're going to be leaning a little bit on that to see what the municipal recovery actually looks like. I will echo what Dave Goodell said at the beginning of the call, which is if you can just be patient and wait and not try to sell immediately, that's usually best. If you look at wildfires all over the country, there's an immediate impact that happens. It's a shock. There's property valuations tend to go down, especially for raw land. And then, you know, there's an immediate driver of need for short-term housing, which increases rental amounts, increases sometimes the cost of existing undamaged homes in the same area because everybody wants to be back with those schools and their community. So it has different layers of impacts, you know, on valuation. But if you have a home that, let's say, is just damaged, but it's and it just needs, you know, some repair, but it's looking at streets of devastation, then you're still probably going to have an evaluation problem because aesthetically you're looking at an area that's absolutely devastated. So a lot of it is going to depend on the aesthetics of what it's looking at, the infrastructure rebuild and the timing of that. And also, you know, what is the damage and how, at what point can it be a functional home that somebody can live in it again? And if there's any of those things that are still a deterrent or a negative, or it feels risky to people to buy that home, then I think the best thing you can do is wait and not sell it right away, because what we also know is market valuations do recover. There's an impact. It happens. If you look at 4 Mile Fire, for example, there a lot of those home sites ended up decreasing in value by about 20 to 22% immediately after the fire. But, you know, within a few years, they're bouncing back. And because people are starting to rebuild, a lot of times what's rebuilt is actually better than what was there before. So if you have a home that maybe was damaged, but next to it on either side, homes are being rebuilt and they're, you know, probably safer, more fire resistant, more energy efficient, probably more attractive, maybe, then that is going to help your valuation. So I think really people need to kind of buckle up and wait and see what happens in their neighborhood before they just decide, okay, I'm out. I want to, they may look back on that with regret if they decide to try and sell too soon where they still have a lot of those impacts. I'd like to say one other thing too, if I may, to kind of piggyback on Amy, what Amy Bach was saying, who, by the way, Amy Bach, I'm thrilled you have her here. She was, her team was absolutely an amazing resource to people that were impacted by the 2013 floods. And if there is one sort of bright side on the insurance question here, it's that fire is easier to navigate with respect to insurance claims than flood. Flood gets really sticky and tricky because insurance companies just don't like water. So, so I'm super thrilled. And as realtors, if you can take away one thing as part of your annual plan, it's encourage insurance preparedness, because we constantly see this number of anywhere from 20% to 2/3 underinsured or uninsured with every single disaster. And the sad thing is, a lot of that is completely preventable. If people would check in and make it part of, like, you get your annual checkup with your doctor, get your insurance checkup, do your preparedness checkup. We live in an area where this will not be the last time this happens. So anything we can do as realtors to be communicating that as part of your follow-up plan, put it in your drip campaign to, to encourage people to do their insurance checkup and their disaster preparedness checkup, then these disasters won't be quite as devastating every single time, because we will have done things to insulate ourselves from that. So I can't say that enough. And I know people that know me get tired of me saying this, but it's because I hate seeing things that are preventable happen to us over and over again.
Thank you, Laura. And just to echo that with Laura, while you're doing that out to your clients, do it for yourself as well, right? Following the Caldwell fires last year off of 36, within days, my husband and I met with our insurance agent to do a check-in to make sure that, because of the area we live in hygiene, right? To make sure that we were covered. So you as realtors need to follow the same advice and do the same thing. So thank you, Laura. My next question is to Cameron. Cameron, what's going to happen to the mortgages on the now non-existent houses?
Yeah, this was definitely the first question we were getting as well. And one of the first things we learned when speaking to all of our members who lost homes was that while everyone's in the same situation, everyone's also in a unique situation. So the mortgage remains, and speaking to other lenders in California who went through this, they presumed most would be paid off right away with the insurance funds when possible. In this situation, we're definitely getting a lot of questions. Well, what if I don't want to do that? I like my 2.5% rate and would like to keep that. So they can maintain their mortgage if they prefer. The big thing here, though, is when they get the insurance check and there's a mortgage on the home, because that mortgage is still there, it's made out to both them and their mortgage company. So it needs to be endorsed by the mortgage company. And if it's more than $40,000, it can be held by the mortgage company. And if the loan is not paid off, what will happen is they will disperse 33% or $40,000, whichever is greater, of the total loss proceeds kind of right away. And then they're going to hang on to the rest if the mortgage remains until construction starts and they need more money. They'll then release another third of the total loss proceeds check. And then the final disbursement will be the other third less 10%, which that final 10% is remitted once they get proof that the home has been completed. So you're left dealing with the mortgage company a little bit through the whole process. They're inspecting the home as construction is completed, which is why I think a lot of people advise getting rid of the mortgage piece if possible. But again, in this situation, we're definitely getting a lot of questions about, well, I want to keep it. And they can, certainly, if that's what's best for them, they should. It's just make friends with your mortgage company because you're not have to deal with them.
Great, thank you, Cameron. Before we go to our last panelist question that I have for him, just a reminder to the audience, if you have questions, if you will, please put those in the Q&A, and then we will answer those questions live. All right, so Dave Cadill, my question to you is, my house is the only one that survived the fire. What does that do to the value of my home?
Like Laura said, it's very complicated because you have to look at sales. As an appraiser, like for example, when COVID came out, we had to address what impact it had on the market and so forth. And at first it was an unknown, and shortly after, when showings resumed, it was clear there's no impact. And so what the appraiser is going to have to do is obviously try to find sales either right in the burn area that didn't get burned that sell. There'll be some of those. But again, I would counsel people, don't try to do anything rash, because it's going to take a while for things to shake out. And so the appraiser can't just say, well, it was worth this before the fire, now it's worth that after, because that's not going to fly. And so they have to have support either from possibly other areas that had similar fires to show that data. Like after the flood, we didn't see values decline. It was a hiccup for a while, and then it took off again. And even in the fire that was here outside of Estes 2 months ago, it didn't do anything, but it didn't damage anything. So they have to just be patient. Right now, I'd say their value could have temporarily dropped. If they actually put it in the market, they'd probably take less than what it's worth, just because there's no barometers. But don't do anything rash. And I hope that helps.
Absolutely. Thank you very much, Dave. All right, we are going to open up the questions. I'd like to introduce, for those of you who don't know who she is, Veronica Priscilla. She is my one of my all-time most favorite people, but she is the CEO of Bolo Realtors, and she is going to read off the questions and then direct them to one of the panelists that has that area of expertise. Thank you, Veronica.
Thank you. Great information. I just wanted to also point out that some of our realtor members are in the victim group as well. We know of 26 members who have either lost their home completely or it's so damaged they can't live in it. So be kind out there. It's really tough. Okay, this first question is for Amy Bach. There are companies / folks soliciting using them to get better insurance claims. Can you speak about these services? Are they scams?
There we go. Another great question. So you heard Austin mention something called a public adjuster. That is a licensed professional that you can hire to be your proxy in dealing with your insurance claim. That can be a great option for people, but just like all professions, there are some bad apples, and the ones that come in from out of state after a disaster can cause more problems than they solve. And so, like we already heard of a PA coming in from out of Colorado and charging somebody a 50% fee, which is ridiculous, right? So the fee, if you hire a professional to help you with your claim, their fee for a public adjuster should be somewhere in the range of 7 to 15% of what they recover for you. And it's perfectly legit to hire one, but just like any other profession, check references and license status. I have a very strong preference for local folks. So in our Find Help directory at uphelp.org, we do have a number of Colorado very experienced public adjusters. We use them as instructors, and there's some really good ones. But no question, scam artists are attracted to disasters. They come in, and you really have to be, help your clients. And if you yourself are in the situation of having been affected, just be so careful, because people can have a really sweet sounding sales pitch and it can be completely empty.
Thank you. Dave, will there be something released detailing what the estimated land values are today for the victims? They will need that value to rebuild if the intent to borrow money from banks in the future and the Boulder County tax assessors value is always lower than the appraised value.
Well, number one, any type of loan that's going to be taken out, or an appraisal is going to be reviewed by an underwriter, as Cameron knows, and they're going to decide that, because there won't be any land sales to establish a current site value. But a lot of appraisals with cost approaches, it's going to be based on the market approach or what it'll sell for, not so much what it's going to cost to rebuild. The cost to rebuild is a barometer, but I don't know of anything that's going to be released yet. I think it's just going to have to be, again, be patient, wait and see to see what happens. There will be some people that will, just take money and walk away. But keep in mind, the site value for the assessed site value doesn't include the tap fees. The tap fees still retain their value. Sometimes the foundations survive the fire, and what they could do is maybe try to track down plans from their house if they want to rebuild the exact same house, but they can also cut some corners, to help the appraisal gap tighten from loan to value ratio, like maybe add the garage later and those type of things. But to directly answer that question, there's not going to be any list that I know that's going to be released. It's just going to be on a case by case basis. I don't work that area, but I'm going to kind of take it on for me to analyze stuff in that area, because I do have friends that lost their homes and I'm going to help them to do what they can do. But now, right now, there won't be a way to really establish the site value. Sorry.
Thank you. I'm not sure who can address this one. What is being done to negotiate with the city of Louisville, the town of Superior, and Boulder County to grandfather in properties lost in the fire? Can the current building codes be relaxed at least somewhat?
I'll try that one. I don't think the codes are going to be relaxed, because that's impossible. It's like changing law. But what can be done is the counties and cities could relax permit fees for rebuilding, and that will help tighten up those loan to value ratios also. Instead of having 10, 12, 15, $20,000 in fees, maybe there's a way to waive some of the fees. That would be the best way to go.
For Amy Bach, what resources do you have or suggest to provide our current homeowners who were not affected by the fires to help them guide a checkup on their current insurance coverage and how to enhance that coverage to best protect their interests?
So I really appreciated Laura's comments earlier about how important it is to encourage your clients when there's something in the news that gets their attention to pull their insurance policy out of the drawer, call their agent, and do a checkup. Uphelp.org, our website, has a buying tips section. My favorite publication is called Shop Smart, and it just gets right down to the nitty-gritty of what matters and what you need to do to update your policy and make sure that you've got reasonably adequate protection.
Okay, just a general question about homeowners associations. There are a few neighborhoods where many, 150 out of 550, if not all homes were lost. Is there any guidance for members of this panel have for HOAs moving forward?
Is that something you can answer?
I'll take a shot at it. Basically, they need to just look at their HOA documents and see what power and rules that the HOA has to enforce rebuilding. Is there a covenant on size of home restriction, finishes, exterior, landscaping, those type of things, and then work within those. They kind of dovetail with the building permit and code process. Some HOAs have more teeth than others to enforce things.
I can add a little bit to that as well. I think one thing that's really important for anybody in the impacted areas is to understand what kind of recovery, long-term recovery group is being established. And I know there's already talk about a housing committee, and there will be different committees that focus on different things: rebuilding, short-term rentals, infrastructure, roads, donated materials. There's going to be different focuses from the recovery teams. So if there's a large HOA that's kind of in the middle of the impacted area that has a lot of those kinds of questions, they should really try and get on that committee so that they understand all of the related impacts on what's going to impact them. They can review their documents, as Dave is suggesting, and then be part of that conversation. That's the most important thing in recovery, is to be part of the conversation and also not miss out on resources. One of the most awful things as a recovery manager to hear is somebody who comes way down the road and says, where do I get help? And the resources have been exhausted. So it's really important to always understand what those resources are, take advantage of them while they're here.
Dave, did you have to add? Mm-hmm.
Yeah, I just wanted to add one thing, and that is make sure those HOA documents are recorded. If they're not recorded, they have no bearing on anything. There's a lot of HOAs that don't have their documents recorded, and that's why the Colorado set HOA laws 5-10 years ago to kind of limit some of the powers, because some of the HOAs were just doing things without them being recorded. So the documents have to be recorded, stamped documents that are covenants on the lot.
Okay, this attendee says, I've heard of people seeking to get FEMA loans to get enough money to rebuild their homes in the event that their insurance is not enough. What is the underwriting criteria for such loans, and will it pose problems for older homeowners, 65 plus, and for households that are heavily leveraged against an existing mortgage or other loans on their household?
I can probably take that question. One of the most difficult messages from Washington, D.C. Is FEMA is a last resort. They only provide resources once the local and the state governments exhaust theirs. Secondly, FEMA is more focused on infrastructure. They don't help individual homes be rebuilt. I mean, they may help with some short-term money, temporary housing, of course, trailers and that FEMA trailers and that sort of thing. But for the most part, they're focused on sort of broad infrastructure, and it's supplemental to all of the other disaster relief available. Unfortunately, if you look at the statistics, the most on average that an individual family or homeowner gets is a few $1,000s of grant assistance. And it's true that is net of any insurance that you have. And I mean, in fact, you would receive more money through the Realtor Relief Foundation of the state, local, and federal national association than you would disaster relief from FEMA. So just be aware of that. I mean, a lot of people believe that FEMA will provide a lot of resources after a disaster. They do what they can. Every little bit counts, but it's not going to be much. Insurance is the first line of defense. There was also, just to be clear, while FEMA will not provide grant assistance directly to homeowners, or at least not more than a few $1,000s, which is not enough to replace even your appliances, a single appliance at that, SBA will grant a loan. And it's a subsidized low interest loan. It is for the difference between whatever your insurance covers to what you need in order to rebuild. I can share through Amy here and others what the criteria are. It's pretty low. You have to establish it's your home. You have to establish you've been in a disaster. That it's not going to be that challenging to do when you apply for disaster assistance on at the county site. It automatically you're put in for application for an SBA loan. They'll ask you a few additional questions, but that's already, and there are no constraints by age or any of the protected classes. There isn't an SBA loan. Unfortunately, that has to be repaid along with the mortgage, even if the house is not there, but at least it provides some assistance. And just to echo a theme that I mentioned, insurance is the primary line of defense. That's the plan A. Plan B, in this case, where the federal government has issued a major disaster declaration, which is very rare, it's very unusual. You all are very special that doesn't happen very often for wildfires. So plan B is an SBA loan or going to your bank for financing. Plan C, D, E, F, G, go all the way down the list. That's where the federal government comes in. It is the last resort when you have nothing else, and they'll provide, counseling, housing, temporary housing assistance. So look at the federal government as a fallback and take the opportunity now, even if you're in the middle of a dispute with an insurance company over the coverage that you have, or your client's in a dispute over the coverage you have. Now's the time to look at that insurance policy and take the experience that you're experiencing now and encourage them to relook at the insurance policy in that context. So this idea that there should be an annual checkup of the insurance, I have to 110% endorse that recommendation. The insurance is the way to most quickly make yourself whole again, not disaster assistance from FEMA.
If I
If
can
I can
echo
just add
something on
one,
that.
Whoop, go ahead. No,
We're probably going to say the same thing, Amy. So that is the biggest misconception behind every disaster is FEMA comes in. FEMA is about, they have public assistance and individual assistance. It's the federal government coming in to help the local government. And it's mostly with sheltering, initial response impacts, and then infrastructure. Then, as Austin was saying, if you have one of these big events, you can get some individual assistance, but it's a small amount. So there's a hierarchy of assistance. Number one is insurance. Number two, SBA loan. That is a loan that you can get. After you've exhausted that, then there's other options. And the one that Austin didn't mention is philanthropic options and nonprofits. So the long-term recovery group, what they do is they come in and they take funds like all of the donations that have come in to, the community foundation, the Elevations Credit, all of those things. And what they do is they have a team that makes sure that those donated resources are properly managed and that their money is going to the right people who actually really need it. So there's an unmet needs assessment process that's done through case management. So after you've done your insurance, then the SBA, you've applied for FEMA, apply for everything, by the way, even if you aren't sure, apply for all of it. Then you should connect in with a case manager, which that's probably not quite set up yet. So don't be rushing to look for that. You will be hearing about it here in the next week or so. And then get with a case manager who will then assess all the resources that you've had. They'll find the gap of the unmet needs and help advocate for you to get additional assistance from the philanthropic bucket of money as well.
Yeah, actually, I only have one other very small thing to add to both those excellent answers, and that is that with all the disasters that are hitting these days, FEMA has really, they're a little overloaded with the applications. So if at first you get a no, try again. And that goes for the SBA loans. We are hearing, this is kind of a new phenomenon. A lot of people are saying, well, I applied and they immediately rejected. And it's unfortunately one of those things where you just gotta go back and be tenacious because those $250,000 max SBA loans are a good deal. I mean, the interest rate's super low.
Thank you. This question is for Ted. What would be a good range on cost per square foot for reconstruction when doing insurance checkup?
Thanks, Veronica. Yeah, it's a question we're getting multiple times a day, and it's a hard question to answer right now. A lot will determine, we talked about codes earlier, what code the cities require these homes to be built back at. I talked about the analysis between the 2018 and the 2021 and that NZE component. The time that it takes for the cleanup that we just kind of talked about a little bit here, and remediation, what sort of hazardous waste remediation. But when it comes down to it, our production builders aren't even pre-selling homes right now. And that's because of the volatility in the supply chain and in costs right now. So they're taking them through frame, maybe through drywall before they're actually entering into a contract where they understand what the cost will be. So it's hard to say, on January 21st, 2022, we can give you, here's the square footage today. But by the time one of those impacted homeowners is ready to rebuild, those costs will change. They'll have changed. So it's really difficult to give that answer. I can tell you one of the charges of our task force is to try to give a heavily caveated, if that's a word, if you will, kind of understanding of thumbnail sketch of what the cost per square foot is. Our sister organization up in Grand County did a good job of that last February, but we don't want people to take that as gold right now and say, oh, here's the cost to rebuild. I've heard a lot of quotes both from the insurance side and people telling me they came from contractors that run a very, very large spectrum from the 200s all the way up to sevens. It's probably somewhere in between. I'll just tell you that right now, but there's so many factors that influence cost right now, will always influence cost, and those are so volatile. So it's really tough to answer that question right now.
Yeah, and if I can just throw in a little caveat for you and your clients, you know, in the wine country fires in 2017 in NorCal, you know, similar, you know, a lot of homes down, quite a few high value homes. The rumors were rampant of like, oh, $600 a square foot. And it kind of, I think it probably made some people's insurance negotiations harder and scared the crap out of people. So to the extent that we can try to quell those rumors, that's I think a very good thing.
Great, thank you. Cameron, do you have any info on construction loan options yet in an effort to determine keeping versus paying off a loan?
Yeah, so we do have a construction department. You know, a lot of banks do, so not just us. We are expanding our loan to value kind of maximums to, you know, despite not knowing what the costs are, we do think it's going to be more. And there's so unknowns with values, and so we are expanding that so that the construction loan to value would be higher. How it works is the construction loan, if you still have a mortgage, would take out that mortgage and then draws as construction is completed. If you don't have a mortgage, or you know, you don't necessarily need to contribute anything, the values in the land, we'd use that equity in the land. And so you wouldn't necessarily need to put anything more down, so to speak. As I started with though, every situation is unique. So we have some people who are plenty of insurance, there's some people who have no insurance, and kind of figuring out, you know, do you use the SBA loan, and kind of putting all those things together. We are working on putting together some tools for people so they can analyze that unique, and we can help you analyze that unique situation based on, you know, will you have a loan left? When are you looking to rebuild? That's the other big unknown, right? So if you do have questions, you know, please feel free to reach out to me. I can connect you with our commercial department. And again, to help, like, we just want to help you analyze it and see what makes sense for your unique situation. We're working to get those tools out to our loan officers as well.
So to piggyback on that question, Cameron, will lenders lend on a home in the burn area that did not have damage but needs to sell now?
As long as Dave can get us an appraisal, you bet. Yeah, I mean, from our standpoint, and as long as there's no health and safety issues, we're fine. You know, and again, the value's there. That's kind of the big unknown, but we're not going to overthink this. So the lender's not going to overthink it. If they're the only home standing, and you know, we've seen the images, we've driven around, and it doesn't look great now, we're ignoring that. Like, it will come back. The home will be there. We just need comps, or like a reasonable approximation of what we think the value is now. And we'll happily lend on it.
And you're going to need utilities.
Sure. Yeah. And that goes to the kind of health and safety issues. Like, as long as it's functional, you can live in the home safely. You bet.
For the SBA loans, are they applied to directly through SBA, or is it in cooperation with a local lender?
So you apply through the either the federal portal, or go to the Colorado, the Boulder, Colorado disaster assistance, and fill out the application, and it's automatically put in.
If someone pays off their mortgage and moves to another town, what happens to the lot?
I don't know. I would say it's their lot. In fact, I have a member doing that. And if there's still a mortgage on it, they would need to continue to make payments on that. I've kind of skipped over, if they are experiencing financial hardship, please reach out to your lender. You can ask for forbearance or for a loan modification, but you know, the lot has value. And the member I spoke with is, you know, keeping it as an asset and moving closer to family, moving away, and they'll see what happens. And maybe they'll rebuild, maybe they'll sell it. But
okay. Have we heard any word from major insurance carriers like State Farm and Farmers that will provide 100% full replacement cost coverage for their policyholders, notwithstanding what their legal obligations are under the policies?
Not yet, but you have a very proactive, pro-consumer insurance commissioner in Colorado, and he's now held 2 big town halls, and I think he's pretty shocked at what he's hearing about some of the hurdles that some insurance adjusters are putting up. So I think, you know, similar to my first answer about, you know, trying to get an insurer to do something that's sort of outside of the box for them. There is a history in other wildfire impacted areas of some insurers cashing people out early on, particularly where they're underinsured, where it's very obvious they don't have enough insurance, so they won't put people through that whole depreciated value first payment and then pay the replacement value benefits after the person has spent more of the money. They'll just cash people out. It does happen, but it's way too early in the process, I think, to be looking for insurers to make kind of widespread public concessions. They really prefer never to do that. You know, a lot of these kind of, you know, people who get cashed out, usually there's some sort of a confidentiality agreement with it. But I am fully expecting this commissioner to be continuing to put quite a bit of pressure on insurers in this situation to go outside of the terms of the contract wherever possible.
These kinds of events can also impact legislation. So another great way to get involved, if there's anybody listening in that's really interested in policy, this is where you can make an impact, is what regulations in the future will impact insurance coverage and what they pay out. And I think most coverages are looking at about, you know, dwelling value plus 25% or so is kind of common. There are policies out there that will do 100%. But like anything, you have to buy those. You have to seek them out and buy them if you want to know for sure you're getting that. Negotiating after the fact is a long climb.
Yes, and to Laura's point, your representative, Judy Amabile, has a bill that she's just put in this week. Our organization has been helping craft it with some folks from the insurance industry and the department. And some Colorado-based public adjusters and attorneys as well. So that bill it's not going to likely technically, if it gets signed and gets through the process, it's not technically going to apply to the folks who are impacted by the Marshall Fire. But again, there's a lot of negotiations that go on, and when the legislature has made it clear that they are going to hold insurers to a higher standard of properly insuring homes in the future, that may help some of the Marshall impacted folks get a better deal.
Great. With environmental impact on the land, will homeowners potentially have to get a phase 1 or phase 2 environmental report in the future to borrow?
I can answer a smidgen of this. This is in a more urban area than we've seen in the past. So it's better for homeowners to hitch their wagon to the municipalities and see what's being done in terms of coordinated debris cleanup and all of those initial infrastructure repairs, which will be very coordinated through the municipalities in Boulder County with FEMA money as well. So nobody's really on their own, you know, initially. And so I would definitely be tracking all of that first, and that could provide some answers.
I guess my question would be for Amy, just if people have guaranteed replacement, are they then protected if it come from shortfall?
Well, we haven't seen guaranteed replacement policies on the market in years. Some insurers have come pretty close with these extended replacement percentages. But again, you know, the most important thing to focus on is trying to establish and reach agreement with the insurer on the reasonable replacement value of the dwelling that was destroyed. And so, people they get so nervous, and early on, they hear all these rumors, they think they don't have enough insurance, so they often will sort of skip that essential step and start trying to, do battle over getting the insurer to do something different from what the insurer wants to do. But really, that establishing that as was replacement value is so important to getting yourself situated in the process and being able to negotiate a fair settlement with your insurer.
See this real quick. This summer, we just moved to a different house 4 or 5 months ago, and my policy says guaranteed replacement.
Well, that's great news. That's great news, because we had those policies were on the market. And then there was we had the 1991, the big fire outside of San Francisco, and the policies disappeared. The insurers I think there was a lot of regret that they had gone there, and we started seeing them creeping back in. So that's great to hear, Dave. If you do have, if a client has a guaranteed replacement, it does kind of bust the limits, and whatever it costs, then that's what the insurer will pay. But most people will have a cap. They will have either a set amount on their dwelling, and hopefully they have a kicker when one of these riders, this extended, I think we have a question about that as well, these kickers that add some coverage. But GRC is the best if you have that.
Well, see, what they did is they estimated my cost to rebuild too low, and I argued with them. So then I asked for them to send an adjuster out to estimate my house. And then they put the guaranteed replacement with their numbers, so they're locked in.
That's great. That's the ideal.
Okay, there are several questions about accessing the aid funds through NAR. The grant process is being run through the state association. You can go to our website and get a link to that grant. Those are available to the victims, no matter if they're a Realtor member or not. And it's a pretty easy process. They are reviewing grants every single week and distributing the funds as quickly as they possibly can.
Right, and just to piggyback on that real quick, the NAR funds, so that's the Realtor Relief Foundation, and that goes for help with mortgages and or rent. The Realtor Relief Foundation was absolutely phenomenal to us during the 2013 floods. And again, it is for everybody. So if you have clients, friends, you yourself have been affected by this fire, please encourage them to apply for the Realtor Relief Foundation grant.
There's only 6 more questions, and a couple of them are similar. We are approaching 2 minutes to the hour and a half that we allotted. Is everyone okay with staying on just a little bit longer?
Sure.
Great,
Yes.
wonderful. Ted, how does a homeowner decide whether to rebuild individually or collectively? Is it possible that a developer could come in to work with a subdivision like Sagamore or others that were completely or largely destroyed to rebuild the entire subdivision?
Yeah, another question. Thank you, Veronica, that we've been getting quite a bit. Insurance plays a big role in this, right? Every homeowner's insured differently. There are examples. The best one I know from Scripps Ranch fire in 2003 in the San Diego area, they did do that. They rebuilt at scale, if you will, and rebuilt it using developers, kind of the model that we normally develop neighborhoods, right? Developer improving the lots, or in this case, rehabbing the lots and then allocating them to builders to rebuild. And they had to work with the insurance companies. They were able to work with a handful of carriers, the Division of Insurance in California, and figure out how to make the costs work between, say, contents coverage and replacement cost. So it's something we're exploring. We've had an initial conversation with the property casualty insurers and the Division of Insurance. There's another, we'll have another conversation about that as well. We've certainly had people from Sagamore and some other neighborhoods asking us, yes, do we have builders available to build at scale right now? The labor issues are huge. They're immense. It's a challenge that we've had for a long time in Colorado and elsewhere. So that and the supply chain, those will be mitigating factors to be able do that. I think, in talking to some of the local governments, I know they would prefer to do it that way. Of course, it's easier from a plan review, permitting standpoint to do that at scale. We just don't know yet. It will be up to, though, I think the essence of the question is it's up to the homeowner. It's up to the insured how they want to go about doing that, and what resources are brought to bear from a local government standpoint or for the federal resources that we talked about. Our biggest concern is, and it's been talked about by Amy and Laura and others, is the underinsurance. And I think that's where we want to talk to the local governments, and we're doing that on Monday, about what sort of codes, what sort of streamlined permitting, what sort of streamlined plan review can we expect down the line for these homeowners, so that we can get a better understanding of time and cost. But yeah, I just don't know yet if what the answer is on scale versus individual, but that is being explored.
Thank you. Cameron, what if your debt to mortgage equals replacement value or more? Then does one have to get a new mortgage for the full rebuild amount?
Do they have to, or are they asking if they can?
Do they have to?
I mean, no, I mean, they get the mortgage they need. I guess I'm just a little confused on needing the full amount. We would be limited to, we're moving it to like 90%, so of the rebuild cost, or excuse me, future value, right? So for a construction loan, we're using the value of what the home will be worth once it's completed, and we'll end up to 90% of that value. So if we think it will be worth $1 million, we can do a construction loan up to $900,000 is what we're thinking. Previously, it had been limited to 80%, but we wouldn't be able to do financing up to the full $1 million, though you shouldn't. Well, that's the big question, right? But since you have value in the land, it should be part of that in terms of the equity. So we're hoping we won't need to go, won't cost $1 million and be worth $1 million. It should be below that.
Okay. My client lost their home and are purchasing a townhome that is in the area, not damaged, but the seller of this townhome has filed a claim to remediate ash in windows, clean air ducts, carpets, etc. Is this claim going to affect my client's new insurance policy for the townhome?
Short answer, probably. And to the only way to find out is to start getting some quotes and see whether there is something called this Clue database, where insurers can see the loss history on a property by address, even if it wasn't a property they insured. So chances are there will be some, in either some rider or something, or there may be a cost factor. Just to note for everyone who's dialed in, there's a lot of high anxiety around the homes that were not maybe physically touched by the flames, but that were in the vicinity. And I think some of that story is going to be told in the coming weeks and months, because the bottom line is it's really expensive to do a proper testing and a proper cleaning and a proper retesting. So of course there's some tension between property owners and insurers, and some of those partial loss claims are even harder for people to resolve than the total losses, because it's so much subjectivity.
I also think people need to prepare themselves for an initial surge in the cost of insurance in general in our
Yep.
area.
Right.
Even unaffected zip codes nearby. So that's how these events are paid for. That's how they recoup, is they end up passing some of that on to others in the region. And it isn't always that way forever, but there will be a spike. So I would just prepare yourselves for that. And there's probably not a lot we can do about it.
Yeah. And I think, there's a fine balance here, with getting insurers to do things they otherwise would prefer not to do, but to get people back home, but then, wanting to make sure they still want to do business in Colorado. I've been spending quite a bit of time with realtors in California, because our market has got so weak for homeowners insurance when we had a series of fires. So hopefully things will stay, you don't have a state-run insurer of last resort in Colorado like we do in California and some other states. But I know that the commissioner and I, we've discussed this, and we're little keeping an eye, but hopefully you won't need to do something like that. And I just want to make an ask to y'all that if you know a really good insurance agent that you work with, if you could make an introduction to me, because I think people, they do come to us looking for reliable local folks, and it would help me to have some relationships with some of the insurance brokers or agents in your area that you have confidence in. Thank you.
Great. Laura, can you comment on what people should be considering when they are thinking about either rebuild or settle with the insurance company and buy something else?
Well, I think, again, to kind of echo the theme, it's first of all, take a step back, take a deep breath, think about your long-term plans that would have been your long-term plans if this hadn't happened, and make sure that you still have an eye on that. Don't let this completely, if you can prevent it, unwind your world to a point that 5 years down the road, you don't recognize where you're ending up, and you're not going to be satisfied with that. So it's hard to do that. And one thing I really want to talk about at some point is the whole emotional and mental health aspect of this, and make sure that all of us who can be a support system to the people that have been impacted by this understand that this is a long journey, and it's going to look different for everyone. Just like we learned in the pandemic, the phrase is, we may not all be on the same boat, but we're in the same ocean. And recovery is very much like that. It can be, maybe a little easier for some and very challenging for others. So right now there's kind of this great community bonding experience. It happens right after a disaster. We all come together, one for all for one. It's amazing. And then a year from now, people are shocked that people haven't rebuilt and they're not normal. Their life isn't normal again. It's like, you're not done yet. We have to be willing to really be on this roller coaster ride for a long time with people. So as for your original question about kind of what should they do, I think they should assess all the impacts of their short-term world and their long-term world to determine what the best outlook is for them. And if they can be patient, that's the very best thing they can do, because waiting is usually a better answer as the world around them kind of starts coming back together and repairing. I hope I answered your question. I know I got off on a tangent.
Absolute perfect sense. And that's what I've been telling people who reach out to us for, what can I do? What can I do? And I go, I'm going to need you in 6 months.
That's right.
Because this need right now, we are overwhelmed with the support, which is so amazing. But like you said, down the road, when the immediate emergency is over and the real work begins.
And please put a reminder in your calendar a year from today to make a donation to the Community Foundation. We always see this surge of funds, and it looks like a lot of money. You're going to see all these updates, millions, and everything's great. It isn't going to be enough. No matter what that number ends up being on those updates, it's amazing, it's inspirational, it's not going to be enough. So please plan on donations in the future for the next several years, because usually as a recovery team, we are trying to stretch every last nickel that we actually got in the fundraising in the first 4 to 6 months, but usually it's the first 30 days. So please remember that.
Yes, one of the final questions here was, do you think there will be enough private charity money to cover the insurance deficiencies of affected homeowners? I don't think so.
I'm sorry to say no. It really, the responsibility starts with the property owner to keep and maintain the best coverage so that they are whole, and make sure they're with a responsible insurance agent and insurance company that is their partner in that, and make sure that they're analyzing that every year. And on a personal note, I upped my policy twice in the last 6 months. So, it's a constantly evolving thing as we learn what the replacement costs are. Another thing I would encourage is understand your policy. There's 4 buckets of coverage. There's your dwelling, there's your personal property, there's additional living expenses, and then there's things like detached garages, other buildings, and then there's also some liability. Your personal property is anything that if you flip that house upside down and shook it, it's what falls out. That includes your appliances, by the way. So you want to make sure that you have ample coverage for all of that personal property. And I think people will be really shocked how much that all is worth. It takes decades for us to accumulate all this stuff. And then also make sure that things that require a separate schedule or rider, like artwork and jewelry and all those valuables that are maybe not covered completely under personal, that you have a separate schedule for that. So I know I sound like a broken record all the time, because people don't usually listen to me. So I'm going to keep saying it, because that is the key to people coming out of this with a smaller amount of impact. But there will be lots of help, and compromises are going to have to be made. You may not get the same tile or granite counters or whatever when you start to rebuild. You may have to compromise on some of those materials if you're not fully insured. You may have to bring in some volunteers to help, which there will be a lot of opportunities for that. So there is hope, and there is a way to fully recover. It just may not look exactly like what you think it's going to look like.
Thank you, Laura. Veronica, we're done with
We are done with questions. I just can't thank all of you enough for your input and for being on this panel today. Amy, you want to? I've put up the contact information for each of our panelists, and stay tuned. We're updating resources every single day, as Amy said.
One more thing I'd like to say, Veronica, on the emotional support, mental health aspect of this. Please, please, please do what you can to support your neighbors. But if you feel that they need extra support, please go to the Boulder County website, look at the crisis counseling opportunities that are there, and get help before it becomes too overwhelming, because this is a really big emotional deal, and there's nothing wrong with getting a little bit of support.
Thank you.
All right. Well, on behalf of Bolo Realtors and our members, again, as Veronica said, we'd like to thank all of the panelists. The information on the panelists is up on your screen, but please don't hesitate to contact the association, and we can certainly give you the information if you need it. Also, please pass around the link again to your friends, your families, your entire sphere for the Bolo fundraiser. As Veronica stated, the association, Bolo, is here for the long haul. We're not here just for the beginning of this. We will be here for the weeks, months, and years to come to help the victims of the fire. The NAR Realtor Relief Grant, you can access that from our website. And that being said, thank you to all the attendees. This has been fantastic. We hope you have a great rest of your day and a fantastic weekend.
Thank you.
Thank you, everyone.
That was great. Really
Hey,
good.
Amy, I'll be reaching out to you in the next week or so to have a conversation on a thought process that on another webinar. Laura, you as well. I, again, just want to echo, Amy, I've been on all of the Department of Insurance webinars, and they're just absolutely fantastic. And the information, we're very fortunate to have a commissioner who is so compassionate.
Absolutely.
I agree. I've been feeling the same way. And Amy,
Yeah.
I'm so excited to see you here. I wrote Amy, from Bolo behind the scenes. I'm like, please get Amy back.
I appreciate that.
Can you
Well,
send out United Policyholders website about insurance shopping, and there's all preparedness. They've got all kinds of things for people who weren't impacted that are amazing tools. Can we send that out to all the realtors?
Yeah,
so
we'll
that
put
they
it on the
start using them?
website. Yeah.
We'll put it on our resource page. Absolutely. Absolutely. So,
Well, thank you. Thanks for the, the inclusion. And Laura, you've got, I need you on my team too. You've got good talking points, and said a lot of really important stuff as well.
All right, I'm gonna go ahead and shut her down. Thanks so
Thanks,
much.
Dee.
All right, thank you. Take care.
Take care. Bye-bye.